Good afternoon, everybody. Have a look at the disclaimer here, and then we will get started. All right, so we are ending the first month of Ascender being tracked at ICE Systems. Looks like the market's selling off as we speak. No trades as of today yet. Right now we are tracking at 12.49 for the month. We had a great start. We had a really nice run here from I think 8 or 9 in a row. But let's take a look at the equity curve. Okay, yeah. So on November 1st, had a little chop, 1, 2, 1, 2, and then straight up, and then we pulled back. So good start for the first month of a system, anyway. Providing this day is good still. So let's talk about what this is. So Ascender is, a combination of 20 different trades. There are gap trades, trend trades, counter trend trades, pullback trades, volatility trades, volume-based trades. Just about anything you can think of, trade-wise, is in this thing, and they all have really high average trades. They were all individual systems before I combined them. I combined them in order to control the risk, because oftentimes you could have 5 systems trading at the same time. So putting them all together, you make a little bit less money, but at the same time you smooth over those drawdowns, especially when you're switching from a counter trending market to a trending market. If you've ever been in a trending system, when you get into a counter trend market, you get chewed up. If you're in a counter trend market and you're trending, you get chewed up. If you're doing the opposite, so it's important to have a trade for whatever the market conditions are at the time. And one of the things I do to deal with that is first, the main system first decides whether we're in an uptrend and a downtrend, going sideways, what the volatility is, what the market internals are, and then at that point it'll pull one of those 20 trades from the reservoir of trades to have the best match for what the market conditions are. And provided that the system has seen the market behavior before, it should do a pretty good job of matching it up. You get into trouble oftentimes with systems is when you see things you haven't seen before. One of the things that happened this summer was, we had a volatility drought that we haven't seen in 45 years. So, a lot of my friends that were automated traders had a difficult time dealing with this market. And then the only thing you can do when you got a 9-point range, 10-point range on the ES, if you're waiting for confirmation, you're waiting too long because you bought the high. If you're, or sold the low. So the only thing you can do is buy the lows and hope for the best when that happens. And I've got trades in here to deal with that, which is important, especially coming into December as well, because December is often tends to be a dry month in terms of volatility, but it might be a little different this month because the political landscape and all that. So we'll see how it plays out, but especially as we go into the beginning of the year, I think volatility is going to pick up, and the system loves volatility. You can see last year, let me pull up, we tore it up from January to March. It was great few months of trading. So keep that in mind. We will also, like I said, look, this thing's going to travel at about, hopefully, a 45-degree angle with about a $2,000 variance in in price as it goes, and which is what you see right here. About 18,000 to 16,000. That happened in August. So not unexpected. So when you're putting on your contracts, keep that in mind. I want you to be comfortable and not have anxiety about what you're doing. I've learned to less is more for doing this, quite a while. Just be comfortable. So that is what's been going on. background on the system. And thanks for checking out the email. Have a good month.